Hello and welcome from Trend Signal for our review of the data and events, the week starting the 6th of October. Last week, I guess you could summarise last week as risk off, then all change on Friday with an excellent non-farm payroll, the employment report in the US. So Friday very much risk on. But nevertheless, on the week, most indices were lower. The FTSE was down 122 or just shy of 2%. Standard & Poor's, that was down 16, just under 1%. The Dow Jones, 104. So all this, despite the rallies on Friday, still down 104, down on the Dow, 0.6%. The DAX, that looked worse than the others, actually, down 325 or 3.4%. But remember, Friday, German bank holidays, so the markets were not open, so that had a little bit of catching up to do on Monday. The dollar, wow, that continues to strengthen further against the euro, another cent and a half or 1.2%. Sterling was very weak. Cable, that fell sharply, 2.8 cents on the week, 1.7%. So sterling really under pressure. Dollar yen, that had a bit of a choppy week. The rally, we saw Japanese yen rally intra-week, but eventually by the end of the week, the yen was 46 points lower, or the dollar 46 points higher versus the yen, which is what, just shade under 0.5%. Gold very weak, $28, a sharp fall on Friday, 2.3% down. Did show some briefly signs of strength midweek, but as stocks rallied Friday, the price fell quite sharply. In fact, it's the same with most US dollar-based commodities, which have struggled, especially like the likes of silver probing levels last seen in March 2010, when it was on the way up and the height of the financial crisis. Platinum even more marked as prices tested July 2009 lows, so some astonishing moves there. So we've got the ECB out the way. The market, I think it's getting fairly wary of Mario Draghi's words now, as action is pretty thin on the ground. So the ECB event last week was a bit of a non-event to a certain extent. No talk of any Eurozone QE, with most of the talk about asset-backed security purchases. And I think the market was pretty unimpressed, and the euro fell and equity slipped further. I guess the ECB's options are fairly limited. Rates are already as low as they can get, and QE will be difficult to get Germany on side. So inflation is already very low, and the war chest for the ECB is pretty empty, really. You could say the one main positive is probably the sharp fall in the euro, which should stimulate exports and put pressure on imported prices, but time will tell. Sadly for the Eurozone, inflation probably will take a further knock as oil continues to slide, which cutting costs across the whole economy, really. Non-farm payroll was the main event last week, which was incredibly strong, and it looked like we were going to get a positive one, and we certainly have had a positive one with a revision to the previous data as well. So a nice end to the week, equities rallying sharply, as I said, very much risk on. The calendar this week is fairly light. We have a bank holiday in China, the continuation from last week, National Day, on Monday and Tuesday. We've already had out the German factory orders on Monday as we speak. A very, very poor data. As we can see here, factory orders slumped most since 2009, so the market has not reacted particularly positively to that. We have the Bank of Japan's monetary policy meeting, and I think looks like some of the data has been quite poor, and I think they're going to have to try and justify some of these forecasts they made earlier on in the year, or perhaps cut them, which is more likely. On Tuesday, we have manufacturing production in the UK, month-to-month data, looking at slightly softer data there, staying in line with the manufacturing PMI datas. Then we jump to Wednesday, and probably one of the key events, along with our own MPC meeting on Thursday, but we've got the Fed Open Market Committee meeting minutes. It seems that the actual meeting is key, but then the minutes are just as important, where we consider the doves versus the hawks, and will they, won't they, raise rates, etc. And I think with the very benign inflation and looking at the way the US dollar has rallied, the downward pressure on inflation perhaps will put the hawks in check, as it were, and I think it's likely that we are not going to get a rate rise in the US probably until at least the end of the first quarter or second quarter 2015. As I say, the minutes, that's be interesting to hear what they've got to say about their deliberations, but that's on Wednesday evening at 7 o'clock. Thursday we have our own MPC meeting with the announcement at midday. No change expected there, and a statement, an accompanying statement. We're not going to find out who voted how, but it's possible we could get another dissenter, but we'll find that out in the minutes to be published in a couple of weeks' time after the event. Unemployment claims, usual weekly claims from the US. We've also got Mario Draghi, the president of the ECB, speaking in the US about central banking. I suppose you could mention problems facing the ECB, which could affect the market, so worth taking note there. We do have a G20 meeting starting in Washington on Thursday and finishing on Friday. It's a bit of a talking shop, really, and I don't expect there to be any effect on the markets at all, really. And that's it. Nothing much on Friday to speak of. That's it for the week. We reconvene again on Thursday. Thanks very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.